Good afternoon. You're watching Closing Trades right here on ET Now with me, Asha Faridi and Cheryl D'Souza in the studios. And quite a bit of fall actually, about almost 380 points knocked off in the Nifty futures. What looked like a tempered start, and from there we've only seen a very gradual grinding down. 368 points lower for the Nifty spot as we speak right now. We're at that 25,800 print. What's weighing heavy? A large part of the market actually. It's it's a mix of autos definitely. That's your weakest link in the market today, led by Hero MotoCorp, which is down about 5%. M&M slicing down by about 3%. Some of the private banks as well, like an ICICI Bank, which has plunged about almost 3%, 2.5% lower for Axis Bank as well. And then, of course, there are heavies like Reliance, down 3.25% on futures right now. So that's really bogging the market as we speak. Almost a 100-point downtick coming in on Reliance Industries alone. Of course, there are a lot of these, liquid mid caps as well. The likes of an Idea, Indian Hotels, which is currently down 4%. This Trent, which is lower by about 4%. And remember, names like Trent and Indian Hotels, you're perhaps seeing the first ever signs of a bit of a cool off in these names. They've pretty much seen a one-way run up, and I can safely say that about Trent for sure. And then, of course, TVS Motors as well, weighing heavy by about almost 5%. But Cheryl, what about the newsmakers today?
Absolutely, the newsmakers have to be the metal counters, Aisha, because given the fact that they've seen a very good run up, at least last week on back of the China stimulus blitz, that sort of a rally is continuing in trade today as well. You have the metal index being one of the top sectoral gainer, or the only sectoral gainer in an otherwise weak market. The likes of JSW Steel has actually hit a fresh 52-week high on an intraday basis in today's trading session. But a couple of other counters that one needs to watch out for in a trade today. Like you mentioned, yes, the auto counters are in the back foot, and one of the primary reasons also could be that the commentary is coming in from the European majors as well. They've cut their forecast for their sales, so that's also weighing heavy on the auto index at this point in time. 2.3% downtick coming in for the auto index. NMDC, that's a counter to watch out for, because you have the iron ore prices that have actually surged globally on back of these Chinese cities going ahead and curbing the home or rather easing curbs on home or property industry. Apart from that, Federal Bank is a counter to watch out for. You have Nomura that's come out with a note maintaining a buy stand. They've set a target price of around 240 rupees per share, and that's the reason why Federal Bank is holding on to good gains in an otherwise weak market, or in a weak Nifty bank scenario as well. PB Fintech, we had the management that spoke to ET Now saying that the healthcare foray is not totally unrelated business, and they will invest up to $100 million into this healthcare foray. So you have the management joining us on ET Now, and today they have managed to snap that losing streak that the counter has been witnessing of late, Aisha. But we also have Anshul Sehgal as well as Naresh Mirani joining us on the show to talk about the market setup, the construct that we are working with at this point in time. And Naresh, let me come to you. And yes, it's not looking like a weak market setup, at least for Indian markets. Now you also have the European markets that's joined the bandwagon of a weak footing.
So it seems like the trade which was there for a long time, China down and everything up, is reversing, and we are seeing some bit of a after effects of it on our indices as such. The reason I say that is because the Nifty is down 300 to 400 points. At the same time, the small cap and the mid cap indices have not really cracked. They're down 0.3, 0.5%. So a much larger move on the benchmark indices, as well as the contribution is coming mainly from the heavyweights across the board. So the breadth is very different on the large cap heavyweight index side and then on the mid cap, small cap side. So time for some consolidation. 25,600 could be a support going forward, and we could stay in this range with stock specific price action.
Okay, let's welcome on board Anshul Sehgal as well. Anshul, hi, afternoon. Seems like the first bout of profit taking place today after what's been a fabulous September, right?
Hi, Aisha. Afternoon. Good to be with you. Yes, the first real, correction that we have seen in the markets after a really strong month. But that aside, I mean, if we look at the longer term picture, and we go back to COVID times, from COVID, towards the end of COVID and the start of the COVID lockdowns, we saw that the markets went one way and up, whether it was small caps, mid caps, or large caps, they just went one way and up after the crack in March 2020 in the markets. And we witnessed FIIs come in with great gusto. between, say, April of 2020 all the way till 2021 November. And thereafter, in the year 2022, we witnessed a cool off in the markets. Particularly the small cap index from the top to bottom fell at one point as much as 29%, ended calendar year 22 at about 13-14% down. And this fall was on the back of FIIs taking monies out of the markets at that time. Come 2023, we witnessed that investors came back in the markets, particularly the HNIs. They came back in the market with great gusto and they started buying in the markets. As a result, we've seen between 23 and 24, the small and mid cap indices go up as much as 70-80%. And so the broad-based rally that we have seen in 23-24 has been just tremendous. Where we stand today is a point where the HNIs, that is the high net worth individuals, are not in an investment phase. They're in a phase where they want to book the humongous profits that they made in this period. Many stocks are up 5-10 times in the last 1.5 odd years. On the other hand, the FIIs have been out of the markets for most of this year, and only in the month of September have they come in with some sort of inkling to buy India. Now, this is an interesting setup where, because of this sort of dichotomy in flows, we may see next year being a tough year or a consolidation year for small and mid caps, while the large caps continue to hold where they are, or even, relatively they are placed more attractively versus small and mid caps. So we may even see large caps go up. But this is a phase where, because flows into small and mid caps are going to be tepid, that we may see consolidation in that area of the market over the next year.
Okay, that's the take coming in the market. Let's address the weakest link today, and that's definitely got to be autos. I mean, not to say that most of the market is caving in, other than a few odd metal names and maybe sporadic technology names. But Naresh, your sense, I mean, dragged lower by Hero MotoCorp, but even in M&M, Tata Motors, TVS, it's across the board selling that you're seeing.
So they need a little bit of a correction given the rally. So if you look at a Hero MotoCorp, recently it has rallied from say 5100 to 61, 6200, taking a pause today. You look at TVS Motors, it's barely seen any correction over the last almost 6 to 12 months, wherein it has just continued in the slower higher top, higher bottom formation. Same is the case with the Bajaj Auto. So out here, a little bit of a correction is fine. Same is the case, Mahindra and Mahindra in the last, say 3 weeks has gone up from 2700 to 3200. So taking a pause, going back to retest some supports, and then slowly making a comeback. So I would expect some more correction across the auto pack. The only one which is an exception is Eicher Motors, which was earlier not a participant and has broken out into new all-time highs. So that's the only one still looks positive out of the whole pack.
Right. Okay. In fact, let me take it across to Srishti as well. She's joining in to tell us about, okay, we will get her in just a second. But remember, Hero MotoCorp definitely has been on the, back foot really, and has been really weighing heavy on the rest of the auto segment. There have been reports of market share losses, them slipping down to number 2 position. In fact, UBS came out with a very detailed account of what's really going on within the auto industry. Let me take it across to Srishti and find out exactly that. And of course, the expectations from the September auto numbers as well.
Well, if you look at the September auto sales estimate, then this time we are expecting a mixed bag, because the retail sales actually got impacted because of the inauspicious period for Hindus specifically, that is called Shraddh Pritipaksh. Apart from that, if we talk about the segments that could be outperformer, then the key to watch will be the two-wheeler as well as the tractor segment. While for passenger vehicle and commercial vehicle, we are not expecting much. But on your screen, you will see the big trends that we are seeing panning out for the two-wheeler segment. It's the rural demand that is expected to be better than the urban segment. Passenger vehicles, the elevated discount levels still persist. Apart from that, what we are seeing is not much growth on a month-on-month basis. The commercial vehicles are expected to see a negative volume impact on a YY basis, while for the tractor division, on the back of the improvement in the farm segment, we are seeing almost a double-digit growth number on a month-on-month basis. Let's quickly take you through the numbers then. From the passenger vehicle segment, it's just Tata Motors passenger vehicle that's expected to show a growth of 8% on a month-on-month month-on-month basis, while for M&M as well as Maruti Suzuki, there's not much expectations. The numbers on your screen. On the back of that, if we talk about the commercial vehicle segment, not much improvement is seen in this particular segment versus the expectations were quite higher. You will see that there is a decline on a YOY basis for all the three companies. If we come to the two-wheeler segment, then yes, indeed, the rural sentiment is picking up, and not just that, going ahead in the festive season, the expectations are building up quite well. The dealers are packing up the inventory on the back of those expectations. On a month-on-month basis, we are expecting all these companies to come out with a positive number. The key to watch will be TVS Motors, where we are expecting a 14% jump. Hero MotoCorp too is expected to show a growth of 11% on a month-on-month basis, and there could be a good rebound in Eicher Motors Royal Enfield, and 78,500 is the expectation, while for Bajaj Auto, the number is expected at 4.3 lakhs. And lastly, from the tractor division, like we said, that both the companies are expected to show a more than double the number that was seen back in the last month. And for Escorts, the expectation is of 11,250 units, while for M&M Tractor, 45,950 units is what we are expecting. It's kind of a mixed bag, but the key segments will be that we'll be watching out for how they perform.
Definitely, Shrishti, but hanging there, yes, auto space is going to be in focus given the fact that we will have the auto sales numbers coming in or start trickling in from tomorrow itself. But Hero MotoCorp in particular, that's been actually under immense pressure in trade today, and I believe because of the market share losses that have been triggered by tepid 3-month registration figures. Not just that, the entire two-wheeler space also is in the spotlight on back of a UBS note. So Shrishti, tell us what exactly is UBS highlighting when you talk about the two-wheeler segment?
Well, for the two-wheeler segment, though, the demand expectation is quite robust, but on the flip side, UBS is highlighting that the discount is seen to be intensifying, and that indicates that there is increased competition and inventories are piling up, and that's why the dealers are pushing more discounts. And interesting to note that it's the e-commerce platform where consumers are lured with a lot of discounts, and especially with some bank offers as well, wherein in the likes of Hero MotoCorp, the total discount range between 11 and goes up to 18%, while for Bajaj Auto, the discount is from 12 to 16% of the range. And that is interesting to note that when we compare some of these low-cost ICE variants from the likes of Hero and Honda, that's actually expensive than one of the low-cost EVs, because Ola's the most affordable model is now costing rupees 62,000, with taking note of all the discounts that are available. And in comparison to that, if you look at Hero MotoCorp Splendor Plus, that is the most selling model for Hero MotoCorp, that's standing at around 69,000 of rupees. So that's the kind of market dynamics that is shaping up there. The e-commerce where you are seeing a lot of discounts that are pouring in just ahead of the festive season, and that indicates that the inventories are piling up. And from the likes of Hero MotoCorp as well as Bajaj Auto, these companies are now offering a discount in double digits. On the back of that, UBS also notes that it's TVS Motors that has actually gone ahead and gained some market share, and on the flip side, Hero MotoCorp is on the losing end. They have lost the market share, and UBS continues to maintain their buy rating on TVS Motors as well as Eicher Motors. But for Bajaj Auto as well as Hero MotoCorp, UBS does have a sell rating, and that's why we are seeing both these counters, at least Bajaj Auto as well as Hero MotoCorp, being the top losers in Nifty 50 today. Back to you.
Absolutely, lot of triggers there for the entire auto pack, clearly under pressure quite a fair bit, as is the rest of the market too. Tell you what, we'll take a very quick break. When we come back, continue analyzing markets on the other side.
You're watching Closing Trades right here on ET now, and it's not looking good for the markets, at least as at this point in time. We are at the day's lowest point and threatening to go below that 25,800 mark for the Nifty right now. We also have Vaishali Parekh joining us on the show right now. A very good afternoon to you, Vaishali. And Vaishali, what's the trend that you're picking up when you talk about particularly the auto pack? We did speak at length about auto pack in terms of what we're expecting from the sales, or what UBS had to say on that particular segment. But what's your take coming in for the entire auto pack, and which side of the fence are you, four-wheelers or the two-wheelers?
Good afternoon, all of you. So yes, actually, there's nothing wrong with the trend still. Today is one such day that we are seeing some good corrective move coming in. But if we were to talk about stock specific, I would still be positive on Maruti and Mahindra, Because having said that, of course, our view still continues to be positive on two-wheelers, but still I feel there is a favorable risk-reward ratio on the four-wheeler pack. So I would be now focusing more on those.
Right. Anshul, whenever this, ease off in the market cools off, and whenever we see back, us getting back to that 26K mark or even beyond, I don't know, one can't really, time the market perfectly. But is there value on the table right now? And if the correction were, to go on another 1.5% from here, 3 to 5 odd percent on the index, what would you be tempted to buy?
Aisha, if there is one thing I've learned in the last 20 years of being in the markets, it is that one should be looking at earnings growth much more than valuations to participate in the market, to prevent downsides. Both things get taken care of if you've got earnings growth playing into the stocks that you're buying. And so I will be chasing earnings growth if I look for stocks over the next 2, 3 years. And dare I say that even a bear market is a narrow bull market. What I mean by that is that if there are, say, 950 stocks going down, then there will always be 50 stocks which will be going up. And history tells us that mostly these are quality businesses where earnings growth is bucking the trend and is really going strong despite the markets losing steam. Now, in such a scenario, I would, that is the scenario that you played out, which is 3-5% market down. I would look for companies where I have a relative certainty of growth. Of course, there is no 100% certainty, but say with a high probability, I can estimate the next 1 to 2 years of earnings growing well. And if you ask me the segments where this will happen, I think that there are multiple pockets in the markets. Manufacturing for one, capital goods. In general, I think that media also is a space which will look quite attractive going forward. The rural economy will pick up slowly and gradually over the coming few years. I think that even the FMCG space, which has consolidated for the better part of the last 2, 3 years, looks interesting. And banking at this time is quite reasonable as regards the growth that we anticipate over the next 2 years. So these are some pockets that I will be seeking opportunities in. And then it will be a much more stock specific approach rather than a top-down sector specific approach that I will be taking.
Right. But let's put the spotlight then on the delivery space, because we all know that Swiggy has gone ahead and filed a DRHP for an IPO, and that means that the competition will just intensify in the entire delivery space. But how does the new entrant Swiggy stack up against Zomato, and what's in store for the delivery giants as a whole? My colleague Sharad is here with a detailed analysis. Sharad, over to you.
Well, the action has picked up in the unlisted market, and if you look at it, last week they filed updated DRHP with SEBI, and the fresh issue, if you look at it, that comes in at almost 3,750 crore rupees. As per our calculations, the OFS likely to be around 6,500 to 7,000 crore rupees as per the unlisted deals. Now, of course, the key buyers over here in the pre-IPO space, that is something to look out for. And Starry Investor Circle is something which we have put. Amitabh Bachchan, Madhuri Dixit, Rahul Dravid, and even Zahir Khan have made it to the list. And also there are some folks not from the Bollywood but from the sports also. That includes Rohan Bopana as well. Now let's look at how Zomato and Swiggy have panned out, and we have taken their updated numbers from the DRHP also, and we have tried to compare them. Overall, the metrics, if you look at it, Zomato is at the higher side of almost 12,114 crore rupees. PAT numbers is something to look at. That is still not profitable when it comes to Swiggy. But Zomato itself, they have turned profitable as well. These are the FY24 metrics. Average order value remains almost the same when it comes for both of them. If you look at the Q1 numbers, now that's the new numbers which we are talking about. Over here also, Zomato is having a higher share in terms of revenue, and it is still profitable. And Swiggy still has posted its losses of almost 611 crore rupees. Also, now let's look at how the valuations in the unlisted market have panned out. It's expected to be around $15 to $18 billion post-listing. That's the numbers are coming in the IPO numbers. For Zomato, current numbers, it was earlier $31 billion, but over the last 4 trading sessions, the stock is down 8%. So that is an interesting data point which we have picked out. Now let's look at the growth numbers, how it's panning out. Zomato and Swiggy, especially the food delivery GOV numbers, which is the gross order value. Over here also Zomato takes the cake. And also looking at the other user metrics also, apart from the food delivery, we have the quick commerce, the dark store growth itself. That is also very aggressive when it comes to Zomato. So a lot of operational parameters which I discussed right now, that is where Zomato is getting the edge. And also when it comes to the market share as well. Lastly, the brokerage stake also is something I like to point out, which came today. CLSA has maintained an outperform rating. Target price is 284, but for the time being, Zomato remains the top pick in the food delivery space, and they have gained metrics across in FY24 and the first quarter of FY25. And interestingly, a very strong statement has come. QSRs are losing market share to aggregators. Now, that is a trend which has been caught by CLSA. But however, one point they have added is that Swiggy will be well positioned once it gets its funding gap filled.
All right, then that's the analysis coming in between Zomato versus Swiggy. But on that note, we'll slip into a break on this edition of Closing Trades. When we come back, we'll talk about markets, which has now seen a mild big bounce back from the T-close point.
Back with Closing Trades, right here in ET now. Still under pressure, even though you've seen a minute bit of rebound, but negligible as it may be. 25,820 is where we're currently at, after briefly even breaching the 25,800 print. 362 points gone, led by autos, private banks, and some of the heavyweights like Reliance Industries. Hero MotoCorp is now down 4.5%, ICICI Bank down nearly 3%, M&M down 3%, and then of course an Axis, Bajaj Auto, SBI. The entire space is seeing a fair amount of heat, as is the broader end of the market, by the way. There too the picture isn't pretty. You've got a count of 116 standing to the declines, with 68 to the advances, at least within the F&O band. Pawan Parakh as well joins in on the show right now to talk about what he's making of the market right now. Pawan, hi, afternoon. Good to have you on the show. We were just chatting with our previous guests. Don't know where the selling is going to abate, but anything that's looking interesting in the market, both in terms of values and, of course, earnings visibility as well, that you would recommend buying? Should we fall further?
Hi, Aisha, and thanks as always. I think it's a tricky market, but actually, honestly speaking, I am on the camp that believes that it's good to see some correction after all. And honestly, we are in the midst of a rally wherein clearly we can see some transition happening. So the last 1 or 2 months, we see that the rally is moving more from BFSI or auto names into consumer and consumer discretionary related sectors, and we think this trend is here to continue as we just enter the festive season. I would want to believe that as maybe to Q2 in that sense is a soft quarter, but in the earnings season, which is about to begin in next 7-10 days, you will see a lot of these consumer companies giving out better outlook for Q3 and Q4, and that will actually set the tone for this sector. Apart from consumer sector, I think another sector which we think should investors should look into is obviously sectors wherein there is very high earning visibility. Power and cap goods is one such sector. And apart from that, pharma and real estate also looks very interesting to us.
Right. Good afternoon, Pawan. Cheryl also joining in the conversation. And you did mention consumer, power, cap goods, pharma, which are looking good. But what about the PSU space? When you talk about the power space, do you also include the PSU related counters on that particular front?
I think, the entire sector is going through a big secular round of capex. As you are already aware, we haven't had a desired amount of capex happening in the power sector for the entire of last decade. And now if India has to succeed with Make in India, Digital India and everything else, power is the bare minimum requirement. So I think power is a cycle which is here to stay for at least next 5-6 years. And obviously some of these large power utilities, including the likes of NTPC, Power Grid and others, will be at the forefront of driving capex in this sector. So I would want to believe that a lot of these PSU stocks in this sector will also contribute in the rally.
Right. Okay. Just looking at the charts of some of these names, Naresh, want to revisit your thoughts on the Nifty Bank. Given that the selling today has been quite excruciating, even for an Axis, ICICI Bank, SBI. These are some of the heavyweight names which are falling. Just wanted to understand what's the level that you would now monitor on the Nifty Bank, and what kind of stop losses would you put?
So the first price point we were watching out for was 53,500 holding on. That's been taken out. And now the next major support comes for the index closer to 52,300 odd levels, which is where the momentum started from in this month. So 52,300, 52,500 could be the next band where one could actually look at it as a buying opportunity. Similarly, on stock specific names, coming back to 1700, 1710 for HDFC Bank. Kotak Bank as closer to 1800 looks interesting. So overall, it could be a slow accumulate zone now for the banking space.
Right, that's all about banking space. But Vaishali, let's talk about the metal counters, because yes, we've seen approximately 8% rally over the last 7 trading sessions coming in for the metal space, all thanks to what exactly has happened in China, and they're continuing with that stimulus or trying to actually prop up the economy. So that's one of the reasons why you have the metal space actually making a comeback. But on the charts, how is this sort of a comeback rally looking to you?
Well, so metal pack, of course, since last week we are seeing a good upward move, but index-wise, I would say it is pretty much close to the resistance level. So I think most of the stocks, that is Hindalco, Nalco, they are pretty much close to their targets. But I would feel stock specific, if one were to look at, it's still NMDC, it is still Tata Steel, SAIL, Hind Copper, Hindustan Zinc. These are the stocks which would still have some further upside. So I guess I would go for a stock specific movement, and index on the whole can see some profit booking, or let's wait for a breakout. But the whole sector looks very, very strong at this juncture.
All right, the metal sector looking strong at this point in time. But Pawan, let me come to you, and you did speak about the real estate space, that it is looking pretty attractive to you. But in the real estate space, what's the key trend that one should watch out for? Because we have seen that the way how the sales have been picking up, or the demand is sustaining at this point in time for these realty majors. But for how long will that sustain? Isn't it fundamentally also, if you talk about it, what's your take on the real estate space as a whole? How should one look at it for a longer term investment perspective?
Right. I think, one thing that we all need to understand very clearly, that real estate is coming out of a very, very deep down cycle. I think, a lot of these companies which are reporting pre-sales in last 1 or 2 years are similar to what they reported maybe 5 or 10 years down the line. So you had a very, very, very difficult last 10 years for this sector. And as and when, such cyclical sectors, when they bounce back, I would want to believe that the cycle is here to stay at least for 7, 8 years. And I think we are somewhere in the middle of this cycle. Maybe after 3 or 4 years, you would see, demand kind of peaking out. And that is the time I think we should be really worried about this sector. But in the short term, I think very clearly that one should be clearly watching out for is, the kind of launches that these companies are doing, because last 3, 4 years, you've seen a lot of these companies have reported very strong pre-sales. Now is the time that, for future pre-sales, you should be tracking a lot of new launches that these companies are doing. And that is what we are actually tracking very closely for our set of companies.
Right. Okay. Those are some of the interesting pockets right now in the markets, just tracking the kind of fall that one is currently seeing. Metals, of course, are holding on to their gains. But I just want to, revisit some of these liquid names as well. Look at the fall on Trent. Look at what's happening with Indian hotels. There's, of course, Auto Pharma. There's TVS Motors. They, too, are seeing a fair amount of pressure as we speak right now. Just wanted to bring up 2 charts, if we can just see what Trent and Indian hotels are doing. And Vaishali, perhaps the first signs of a cool-off in Trent, I don't know, you'd be better placed at, helping us figure that out. Do you see more of a selling coming in on Trent at 75.63 thereabouts right now?
So I would say actually, this was a discussion even early in the morning, first thing that we were looking at. I think, if you see the charts, even on a monthly period chart, I think it is too much into an overbought zone. So, well, I think on near term, one can see some profit booking because the stock has really run up one way. There has been no stopping. And today, for the first time, we are seeing some signs of exhaustion. So I guess if the selling still continues, it can go towards 7,300, 7,200 to start with.
All right, so that's the view coming in on trend. Let's put the spotlight on some of these railway counters. Naresh, how are they looking to you on the charts right now for the likes of Titagarh Rail or for the matter of fact, you have IRCTC and IRCON. How are they looking to you on the charts now?
So most of these names have already created a major short-term top. So the only one which would still be interesting is Indian Railways, IRCTC, because that did not get into a move which was parabolic like IRCON and others have gone through. And it has been holding on to that 850 to 880 mark, which has been the low for the last almost 8 to 10 months. Election days, even before in Feb, March of this year, very recently, 4 to 5 days back as well. So that could be a bounce back candidate, but the rest of the railway names, I'll be very cautious. I would expect sideways move to continue for much longer than most of us expect.
That's the take coming in on railways. In the meantime, beginning tomorrow, new transaction fee revisions in both equities as well as derivative segments will come into effect. Let's take stock of all those changes with my colleague Ansh. She's here with the entire list. Ansh?
Right, so in line with SEBI's new measures, stock exchanges have revised their transaction charges. Exchanges have announced some revision in their STT charges. Now, for calculation of STT, future STT are based on a turnover value per crore, whereas option STT are based on option premium turnover value per crore. Now for NSE, the charges are 297 rupees per crore for cash market, 173 for equity futures, 3,503 rupees for equity options, 35 rupees for currency futures, whereas 3,110 for currency options. Now if you talk about BSE, then they have revised their fees for Sensex and BankX index option at 3,250 rupees, whereas the currency futures is at 45 rupees per crore, which was 35 rupees for NSE actually. Now moving on to commodity exchange, MCX have given the charges of 210 rupees per crore for futures, whereas 4,110 rupees for options. Now this changes align with SEBI's mandate for a uniform flat fee structure, eliminating volume-based advantages.
All right, thank you so much for that, Ansh, for putting it into perspective. But that leads me to my next question, Pawan. Let me ask you about how are you looking at these companies that are linked to the way how the markets have been moving, be it the brokerage companies or for the matter of fact exchanges. How are you looking at these companies, and given the fact that are you also of the view that their growth is linked to the way how the Indian stock market performs?
That's very clearly the trend. I think, the growth is very clearly linked to how the market performs. But I think I must tell you, this entire space looks pretty interesting to us because the kind of client addition we've had in last 5 years across AMCs in terms of SIP or maybe in terms of new broking or demat accounts getting added into the system. As and when a lot of these clients which have got added in last 5 years become more active on the counter, I would want to believe that a lot of these broking companies will make lifetime high profits in next 3, 4, 5 years. And I must tell you, despite the run-up, valuations in a lot of these companies look pretty reasonable. Maybe at a time when markets are maybe investors are less worried about corrections in the market. I think that's a time when I think the stock will do well. But all in all, I think this sector looks pretty interesting to us. And despite a huge number of client addition that we've seen in last 4, 5 years, if you look at the penetration of equities into Indian households, still remains pretty low. So I think this is a pretty exciting theme from India's perspective for next 10 years.
That's the one which is in focus. Of course, Oro, the US FDA, concluded its inspection at its facility in Telangana, and the inspection closed with a good 10 observations. So that's one stock which has been in focus today. Other than that, of course, Alembic Pharma as well, which got the US FDA final approval for a tablet which is used for the treatment of schizophrenia, the estimated market size of which is about $48 million. The stock managed to hold out in the green for the better part of today's trading session. Right now, of course, considerably off its day's highs. The other one, of course, has been PB Fintech, and we will try and bring up those sound bites as well up for you, because we spoke with the management earlier today reacting to the ET Now exclusive story. PB Fintech said that they're only an investor. They do not own assets in the healthcare entity. When we did probe them a little bit more about why this diversification. In fact, let's hear out what the management told us.
Policybazaar is an investor investing between $0 to $100 million. And yes, you can argue it is investing in an asset-heavy model. That does not make Policybazaar itself an asset-heavy model. That is less than 1% of our market capitalization is going in this direction. So this will also in some way go in a franchise model. However, at the initial stage within the national capital region, it has to be a controlled experience where, because you want to give a great customer experience, you have to in some way own the assets. Now, that does not mean PB Fintech is owning the assets. I want to clarify this. Let us, for lack of a better word, call this XYZ company. This XYZ company in the initial 3-4 years owns a lot of its assets. This model is very well proven all over the world. It is called a HMO model.
All right, so that's the management of PB Fintech clarifying on that new foray. And as you can see, the stock right now actually is near the day's lowest point, given up the early morning gains that it had actually registered. But let me come to you, Vaishali, and do a check on PB Fintech and as well as the likes of the other new age tech companies, the class of 2021, as you would call it, Zomato, PB Fintech, Paytm. How is it looking on the charts to you?
PB Fintech currently, if we were to talk, it's resting on a trendline support. So I would say that, well, if 1600, let's take it as a crucial support, it's a make or break level. If these, we can expect a bounce if the stock has some meaning to it right now, or else we may see a further slide. But compared to this, Zomato and Paytm, that's what we were talking about. Zomato is still intact with its upward trend. It has just gone through a minor retracement, but the trend is still intact. So I would say that yes, for near term, 260 should act as a support, and we would continue to have a view of a projected target of 300 and 310. But compared to all these, I would say Paytm is still holding very well. It's in an upward trend, and I think it's a matter of time. We see no exhaustion even in indicators. So if we see the stock sustaining above 700, 710, this could be ready for a target of 780 to 800 in times to come. So that's how we look at each of these stocks.
Right. Okay. On that note, Vaishali, let's have your BTST ideas too.
Well, I would go more in the cash category today. I like Bharat Dynamic today. Firstly, technically very well placed. In fact, most of the defense stocks are looking quite promising, but Bharat Dynamic looks quite good to me. So I would look at this stock for a BTST and even as a positional trade. So, well, I would look at a target of, I will be just giving it to you 1 minute. Yeah, so it is 1159, 1100 as stop loss. As a BTST, I would look at 1200, and positional trade, I could even look at higher target. And one stock in the FNO category I still like is the OMCs. BPCL is holding on very well at the resistance level. So I guess if it sustains here and volume is pretty good, I think it's ready for a target of 385 from here on, and 360 would be taken as a stop loss.
Some interesting ideas coming in there from Vaishali. Naresh, what about you? STBT or BTST still?
So still BTST looking at financials. So first is a buy on Mahindra and Mahindra Financial. The stock is closer to a new 52-week highs and not far away from a multi-year high. Good relative strength in the last few sessions. Stop loss at 333, target price of 350. Second is a buy on Federal Bank, which is clearly the leader in the small private banking space. Has seen good volumes and price move in the last 3-4 sessions. Would expect it to continue towards a previous high. Stop loss at 194, target price of 202.
Those are the BTST ideas coming in from both of our experts, but all eyes today will be on the outcome from the key board meeting of SEBI later today. Remember, this will be the first meet since those Hindenburg allegations against the SEBI chairperson. Let me go across to Ankur for more details.
Yes, all eyes on SEBI board meeting, which is going to be held later today, and it will be important to watch whether or not the board discusses the allegations which has been leveled against SEBI chairperson by Hindenburg Research in the month of August. Remember, there has been a lot of comments which has come in after these allegations have been leveled, and as far as the formal agenda is concerned, we have been told through sources that it is not part of the formal agenda. However, the board may take cognizance of the allegations of the events that has turned up after these allegations have been leveled against SEBI chairperson. Apart from that, we also understand that SEBI may consider mutual fund light regulations which has been pending for some time. Remember, SEBI has been trying to bring the lighter form of regulations for passive funds who are managing indices. So the amount of regulations will be less for them, and once it is passed, it will be easier for many of the fund houses to go ahead with the approval on passive funds. Apart from that, SEBI may also discuss new asset class within mutual funds to deter investors from swaying away towards unregistered kind of portfolio managers who were giving unsolicited calls. Now, SEBI wants these retail investors or institutional investors to come back to mutual fund and create a new asset class for them. So that might also be discussed, and we also understand that SEBI may discuss F&O norms. However, that is not part of official agenda as per sources. It will be interesting to see whether or not after consultation paper which was released by SEBI, it also passes the final version of F&O norms.
Okay, lots on our plate this evening. But right now, of course, you are seeing the markets pretty much closing around the session lows, 360 points off. Though we've managed to really just about on the brink of it, defend the 25,800 print, but it's still pretty skittish. Maybe post-adjustment, we actually end up closing sub that level. Naresh, given the kind of fall that we've had today, what is it that you would monitor for tomorrow? Does it seem like this is just a one-off day? Or do you see more selling coming in the next few days? Because even globally, you are seeing a bout of correction come in.
So it seems like a little bit of a flow shift happening from India, China, and global dip also. So in that case, I would watch out for how we react around the 25,600, 800 band. And more importantly, focus more stock specific. Stock specific trends are much better right now. So would be looking out to accumulate banks on a further dip. Say if we get a dip closer to 1700, 1710 for HDFC, or closer to 1800, 1820 for Kotak Bank, that could be a good counter entry point. So we'll be looking out for a buy on dips. Any further fall towards 25,600, that could be an opportunity.
All right, so that's the take coming in on the space. Coming to you, Pawan, just wanted to get your overview or understanding of what you're penciling in for the IT sector, because in the next 10 days or so, we will be bombarded with the Q2 earnings, with TCS being the first one. What are you penciling in when it comes to the growth coming in for the IT sector, and how much of this huge Federal Reserve rate cut actually benefit the entire space?
Right. So I think very clearly the one thing that is to be watched out for is the commentary on discretionary demand. If you see at last 1 or 2 years, in terms of TCVs or the order inflows that they report, they've been pretty solid. A lot of these companies have reported a very good number of large order flows, but unfortunately that hasn't been able to convert into execution for the simple reason that a lot of these small and mid-sized discretionary orders that they had that were completely missing for the last 2 years or so. I think this is the time when I think, it's been almost 2 weeks since Fed has cut 50 bips in terms of interest rates. And now all of these CIOs and CXO level people in IT sector would have spoken to their counterparts. And I think the commentary or the feeling that they get in terms of future discretionary spends I think that is something which will be clearly watched out for, because that's got a clear impact on quarter revenue growth and margins both. I think that is one single standalone thing, which I will be keenly watching for.
Okay, those are some of the sectors which are looking buoyant right now. Page Industries, Tata Chemicals, interestingly, sudden spikes are what you're seeing on the screen on these ones. I can add an AU Bank as well to that list, which has jumped up about 2% or so. Page, of course, is sitting on a 2% gain. Tata Chem as well, 2.25% higher right now as we speak. But Pawan, any consumption themes that you're still betting big on, and if we were to ease off a little bit, anything that you would buy afresh or recommend to do so?
Yeah, I think two things which are very clearly on my radar is one, we're in the festive season. So you look at jewelry space, apparels, footwear, the entire consumer discretionary basket. I think that should continue, that should do well. And I think within that retail as a space, if you think, that is one sector which hasn't done well for last 2-3 years. So I think that is one space, I'll be keenly watching for. And on the staple side, I think, companies which are making the right moves in terms of penetrating more into rural India, because the feeler that we're getting is that gradually rural India is coming back. So far, the news on the monsoon has also been quite decent. There could be some things here and there on a regional basis, but on an aggregate basis, it's been reasonable. I want to believe a lot of these companies which have got decent rural push, they should also do well. So I think these are the two things out here. But I must also tell you one thing, that given that this sector hasn't done well for quite some time, there is some discomfort in terms of valuation for a lot of these companies. So one quarter here and there doesn't change the real story for us.
Right. So that's about the consumption space. And you did speak about the good monsoon. In fact, you had IMD that just released a statement a short while ago saying that India has actually received the best monsoon rains in about 4 years. The cumulative monsoon rains was 8% above normal as of September. We're talking about the rural theme, talking about agriculture. In fact, Vaishali, how is the entire chemical space or agri-chemical space looking to you?
They are technically also very well placed. So to name a few, I'm looking at Deepak Fertilizers, Deepak Nitrite. These are the stocks technically very well placed. And sometime back, I think someone was mentioning about Tata Chemicals also. So I think all these stocks, and along with this, other chemical, like Archean chemicals, all these are looking very promising. So I think these are the stocks that one should look into.
Right. Okay. Pawan, Vaishali, Naresh, all of you, good to have you guys on the show as always. It's been quite a tough Monday morning, or rather day. Let me hand it over to Ashesha to summarize all the closing trades.
Well, yes, a sea of red on Dalal Street. Nifty ending 350 points lower at about 25,800 odd mark. Banks and financials were also under pressure today. We saw a downtick of about 900 points in the Nifty Bank. 52,950 is where we are currently ending. So it was a tough day for Indian markets this Monday morning. As far as stocks and sector specific losers are concerned, let's talk about Hero MotoCorp. Auto sector was under pressure today. Hero MotoCorp down nearly 4%. We had Axis Bank down 3%, and Reliance Industries was also down nearly 3% today. Some of the laggards in trade today on the index level. Metals, of course, were shining bright on account of strong data that has been coming from China. Nifty Metal Index was the only sectoral gainer which was trading in the green today, up nearly 1.5%. We had NMDC, which was up 4%. Of course, iron ore futures were trading with a jump up of nearly 8% in trade today. NMDC up 4%. Apart from that, Welspun Corp was up 3.5%. APL, Apollo, Nalco, Hindalco, Vedanta, all of these stocks were gaining in trade today. Auto stocks, as I mentioned, were under pressure. Nifty Auto Index was down nearly 2%. We had Hero MotoCorp, the biggest loser on the Nifty Auto Index, down nearly 4%. TVS Motor and M&M were also under pressure today. Remember, we will be having auto sales data which will be released tomorrow, and we are expecting mixed bag from auto sales numbers this time around. Nifty Auto Index was the laggard in today's trading session. Banks, as I mentioned, were under pressure, but let's also talk about Federal Bank. This one was bucking the trend. It was up nearly 1.5 to 2% today. Nomura came out with a note where they're maintaining their buy stance on the stock with a target price of 240. They're very bullish on this stock. They believe it continues to remain their top mid-cap banking sector stock. So on the back of this Nomura report that came in, 1.5% higher for Federal Bank. A whole host of pharma stocks were in focus today. We had Lupin, which was down 1%. US FDA inspected Pithampur facility of the company and 3 observations were issued. The stock down nearly 1.5%. We had Alembic Pharma. This one, of course, was up nearly 1.5%. It received EIR for its oral solid formulation drug. EIRs are already in place with respect to other drugs. This one was up 1.5%. Biocon, meanwhile, on the back of some negative action, was declining in trade, down nearly 1%. A couple of other mid-cap losers in trade. Let's talk about telecom stocks, Vodafone Idea and Bharti Hexacom, because they were under pressure. Bharti Hexacom ended the day down nearly 4%. Vodafone Idea also declining in trade today. Indian Hotels, let's also talk about this one. It was down nearly 1%. Prestige Estates and IRB Infra were also reeling under pressure today. So yes, a tough start to the week. Nifty ending lower. IRB Infra, some of the other stocks, Nifty ending at about 25,822. But that's all the time we have on this edition of the show. Don't go anywhere. Stay tuned to ET Now.
If you like this video, then like, share and subscribe to ET Now.